The U.S. tariffs came into effect in the early hours of this morning, and so did the Canadian response.
Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be a little disturbance.
Right now, there's so much uncertainty in the economy, and it's impacting how businesses are investing, how they're hiring, how they're planning new orders, and it's showing up in the data. And we don't expect that to change. And so essentially, the economy is almost going to be stalled for a period of time.
What this policy does is just raise uncertainty around the growth and earnings outlook. So what does that mean? You take your equity overweight down. We took it from 10% to 5%. We've reallocated some of that overweight to places like the U.S. as well as developed non-U.S. and emerging markets. The probability of recession really is not rising for us, so we just want to build staying power in the portfolio. That's an overweight to equity and still an overweight to high yield.
I think what the market's doing right now, the big story has been the tariffs, that they're actually going to be implemented with Mexico and Canada. But if you look at most of the investment community, they're saying that this probably is temporary. They're not seeing them as permanent. They're seen as President Trump saying, hey, last time I put them off. This time I'm for real. So they take me seriously going forward. And then he'll find a way out.
Tariffs increase the cost of doing business, and that has to be passed on. Then the question is, how much does it slow down the economy? And I think we have to wait and see. This may be a clever strategy on behalf of the president. We're just going to have to wait and see, and it won't be digested overnight.